The higher time frame has changed trade perceptions for a lot of traders, myself inclusive. Now, it is one of the most important, very sensitive concepts to understand in order to stay afloat and be aware of what the market is doing at that particular time. Don't forget to like, subscribe, and comment. So we can discuss higher time frames. Okay, so as said before, we're looking at the higher time frame and then scaling down to the lower time frames. Setup. Okay, so basically going to start from the weekly time frame. Weekly time frame to identify the market direction. Okay, just to get a bias of where the market is going to. Then I can then scroll down to the lower time frames and then find setups. Okay, identify that the market is on a downtrend. Very long time it's been on a downtrend on AED, CHF. Okay, so having identified this now, I'll just go down to a daily time frame, identify my external range, and then plot the shift in market structure. If it's not very clear there, I'll then head down to 4-hour time frame. Okay, so basically this is the way I stage my trades, and it has helped me not taking any unnecessary loss. All right, so from here now, daily time frame, I'll just want to plot out my external range liquidity, which is this zone. This is the highest point the market has gotten to. ERL, external range liquidity. Then, having found this, looking below, there is no very clear plot of the market structure on how it has shifted and a few other things. So just go to down, I'll just go down to 4 time frames, 2 hours. I keep going up until I get to the 15 minutes or 5-minute time frame. Then I'll find my entry and then roll with the charts. So having understood bias, which is downtrend, and then there is this little shift, which is a counter trade to buy into an area value above here, and then a drop down in a higher time frame, which is the weekly time frame. Okay, so going down to the 4-hour time frame now, I'll be identifying my shift in market structures. Okay, these are markouts I've already done before. Let me just clear them so that it's fresh. All right, so in the 4-hour time frame now, identify the last low, the last break of structure, then identify the last high that caused the break of structure, which is this point. This was the last high that caused the break of structure. And then if you remember what we discussed previously on the video on change of market structures is advanced market structure, we said that when there is a break in the previous high that caused the break of structure to the downside, then we have a shift in market structure. Okay, so basically now we have a shift in market structure now, which we're moving from a downtrend to an uptrend. Okay, this is shift in market structure, and then furthermore we now have a couple of break of structures. Okay, I'm taking this progressively so that you can walk with me along the line and then see how to stage a very proper setup. Okay, then we have this break of structure, this second break of structure right after the shift, and then there is this also. And if you look closely, there is also this break of structure. Alright, so having identified this now, I would want to go down to a much lower time frame, maybe the 2-hour, the 1-hour time frame, and then mark out my area of values, my mitigated area of values, and then down to a 15 minutes time frame on this immediate price now to get my entry for the next trade. Okay, so on 1-hour time frame now, from the points where the market shifted now, that's created an area value to the downside, which is an order block per se to the downside, which is this market mitigated and kept going up. So within this now, there is a lot of trades, there is a lot of entries you can catch from here, but for the sake of this particular video, we're not discussing them here. Rather, we'll discuss it here, this immediate price now on a much more lower time frame. Okay, so basically now I'm just going to be marking out entry points from this zone. First entry, then I have this one right here. Okay, I'm not interested in these counter trends or any other thing here, because trading against the trend is one thing and it could lead you to taking any unnecessary unplanned loss. Okay, so also from this particular area now, this whole zone now, there are a lot of entries you can take. Maybe for scout traders, you can basically enter from here, having understood that on a higher time frame, maybe the 1 hour, it's an uptrend, it's a bullish market. Then they can then scroll down to a much more lower time frame, getting their entries little by little from this particular move. Okay, so let's scroll down to the 30 minutes time frame and then discuss what I just said now. So from a 30 minutes time frame now, we have this last low, which is my shift. Then I have, sorry, forgive me, this is my block of structure. So the downside, then this is shift. Okay, and then from that shift now created this entry. This is a fair value gap though. This is a fair value gap here. Then another block of structure to the upside. Mitigation. This is basically how I'll stage a trade that I am discussing now and how you can actually implement it in order to become very profitable. Okay, so this also, this is a 2-hour trade, but if you refine this on a much lower time frame, you can basically get maybe a 4-hour or a 5-hour trade or a setup from here. You get, so as a refined, okay, as I've refined it now, it's a 6-hour trade now. Okay, so basically then you can actually still place your take profit at this external range, because that was the external range from this zone now. So everything here is internally. All right, so that is going to be the first entry personally I would have taken. Then we have another brick of structure right here, another brick also here, then here, basically. Okay, so coming back to our much more immediate price now. Okay, so on a higher time frame, which is 30 minutes now, because I would want to scroll down, but down to the 5 minutes time frame, let's find an entry. Okay, so on a much higher time frame, which is 30 minutes now, I've identified that the market is bullish. Okay, it's an uptrend, so I would want to just mark out, I'll give a few markups so that I can then progressively find my entry. So the last high, and it's not been taken out, meaning that we are still within this zone. Okay, so up until there is a break of structure right here, up until there is a break of structure here, then we'll then find an entry right below here. These zones has been mitigated, so I'm basically looking for an entry from this other block right here, and then a continuous move to the upside. All right, so till I see a break of structure to the upside, then I can basically take my entry from there. Okay, but from this now, I go down to the 15 minutes time frame and then stage these setups. as they are. Okay, so firstly, from here there was a sweep of liquidity right here. Then I have this other block here that was mitigated. Alright, then progressively this is a fair value gap at this zone. The fair value gap. So I'll just mark out this zone now to be my entry. So this is where I would have taken my entry from here, targeting the high, and then setting my stop loss slightly below. Okay, and if you see, it's a 4-hour trade though, and it basically hits take profit. All right, so this would have been a very nice setup. Okay, so these zones now are psychological levels. I'll just call them liquidity. Okay, which is an area in the market, so the markets where price retested a lot of times but it didn't break down further below it. Okay, so that's a liquidity zone. Okay, so there is one thing I'm actually anticipating from that zone now, and it will be this move where the market eventually forms a block of structure, and then instead of taking from this zone, it comes and sweeps the whole thing. Okay, basically taking out liquidity from this whole zone, sweeps it out into this zone, and then a continuous move. All right, so this is basically what I'm looking at to happen furthermore in this price. So basically having my order block at this zone, which has not been mitigated actually. Yeah, it's a very valid zone. It has not been mitigated. Okay, probably catching maybe a 6-hour trade or so. Okay, let me refine to 5 minutes time frame so that my entry will be concise. Okay. Alright, let's see. Setting my take profit slightly at this range here, this zone here, and then my stop loss slightly below. Although I know before then the markets would have broken structure from here, so I would actually extend my take profits to that high, or I'll just go and target the external range liquidity, target this zone, probably target here, target here, or I'll probably look for the highest point. Okay, that is if I would want to hold this trade for a very long time, and this would be my take profit 1, take profit 2, and then take profit 3. Okay, basically, so this is an 8-hour trade, a very nice setup. All right, so I believe from what we've discussed in this video, you're able to grasp the concept of flowing from a higher time frame down to a lower time frame. It actually helps you stage your trades. Okay,